Thanks for joining in on the call today. Um, Wherever you guys are, could be across the country, and we're waiting for more people to come on, but we're going to get started just for the sake of time. Once again, thank you everyone for being here. I'm Russ Morrison. I'm a mortgage broker. I have been for 25 years. I just hit 25 years recently, and that. So in my time as a broker, I've always tried to create the best conversion possibilities from beginning from lead to submit. And today, what I'm going to do is I'm going to cover the process and of how I deal with renewals. Okay. The goal here is that when a renewal comes in as brokers, we want to try to make that renewal a home refinance. And why we do that is for the sole sake of really is we're not competing as much with the branch. We're trying to find purpose to do something, and we're not as really competing as much about rate, but we're going to find a reason why we're going to make changes. And once we have that, then our conversions are going to be higher. Okay. I'm going to share screens with you and I'll walk you through an itinerary for today. And then it's going to be about 30 to 45 minutes. So we'll see how time goes. Please, any questions you may have, please put in the chat. And we'll address those as we go through, but we'll have a little Q&A at the end as well. Okay. Okay, so today's agenda, what we're going to do is this is my team and I is what we're doing is we're looking at, I mean, it's been a bit of a grind, guys, the past couple of years here with everything going on in the industry and stuff. So we're now looking forward to all the renewals we're doing now that are coming up this year and also next year and the year after, because we did a whole bunch of business back in 2021, 2022, and that's going to start coming up for renewal. So we're already focusing on how many of those deals are we going to try to get in order to basically increase our volume for the years to come. Okay. So agenda today is really what are we going to do like with regards to a process and so forth, is what can we do to best convert as many of these files as we possibly can. And I'm going to basically go through the process I go through with every file. It's the same thing. Every file is the lead comes in, I do a strategy session, I do application, and I make a proposal. And I'll show you guys exactly what I'm doing on that. We're going to cover effective strategies to outmaneuver banks and leveraging technology and streamlined processes. And I'll just, like I said, I'm going to walk you through what I do on, there's two funded files, one that it's funding in the next day or two that I've worked on, that a couple of them had, or at least one of them had higher rates, okay, or lower rates, my apologies, that the lender had offered. And then also look at, like I said, is we're going to look at tactics. So this here, tool tips and tactics, I call it, is we're going to talk about the lead to submission process. So we're just going to talk about lead to submission. So I use a lead intake success routine. This is what it looks like. And I can put this in the email follow-up for everybody. But this product I've created, Tactile Mortgage Solutions, is focused on the before conversion strategy and connecting with the client so we can get more applications and ideally build a plan long term. So this is basically what I do is lead makes contact. I find out what the file purpose is, and that allows me to strategically, once we have a meeting set up, then what I do is I will basically run through the same process every time, run through a strategy session with that person. They vet me, I vet them. And then we pretty much at that point, do we go into an application form or do we not? Or is there any purpose to? I am, how I do it to save time and streamline is I don't do application first because I don't want to spend a whole bunch of time having my team collect documents when it may not go anywhere anyway. So what I'll do is I'll do a strategy session, vet the client, they vet me, and then what I'll do is that point is there any purpose of doing an application form? Okay, once you get the application form, then we follow up and we collect documents, then we follow up with the proposal before I send it off. So in this case here, I have email templates in here, and what I will use with my mortgage renewal transfer is this. So a lead comes in either by phone, email, or by text, and I'll always try to get it to email. So I can find out their email address, first name, last name, and go from there. And what I'll do is I've got like a personal video I'll put in here. This is all conversion topics. So if you put a video in there, the chances of them booking a call with you or a meeting with you is much higher when you're more personalized. I'll put my calendar link on there and send it off. And basically they book with me. And then what I'll do is I'll follow up with a strategy session. And what that looks like is I do it ideally via Zoom or over the phone. If I do it over the phone, I will follow up with a Loom video just to cover everything we've done in that call. Okay, so I am trying in the first meeting to get basically the objective of getting to an application form, build trust, rapport, credibility, and at the same time is build a plan moving forward. So this is the platform here. When we pop in here, and I hope everyone can see that okay, is we're going to work on this area here and this area. So people come see us for 5 main reasons. Now, the first one is home purchase, home sale and purchase is the second, refinance, mortgage renewal transfer, or buying a rental property. So each one of these are strategically really built out to help people see the vision of what they're doing, okay, collaboratively. So what I'm going to do is the first one we're going to cover, and this is actually my own personal account, so I'll log back out and log back into the testing account. So to build this in, guys, or to set this up is lead comes in and I've got them now into a strategy session and I'm actually having a meeting with them. I've set up a Zoom call. Now within here, what I'm going to cover is I call it a needs analysis. So what I'm trying to do is find pain in here, pain that I can solve so that we're not just dealing with rate. What we're dealing with is more than just rate. We're trying to solve a problem. So in this case here, this is an actual file that just funded. So during the call, what I'll do is I'll go through a needs analysis, like I mentioned, and I'll let them know, look, I just need to go through about 11 questions to bring you up to speed on, I just need to make sure that what we're doing in your next term it makes sense. And if you need to make any changes, now is the time to do it. Now, at this point in time, we are going to find more people that need to make changes because there's higher debt loads. So I find that when I stick to a process, then what happens here is that it's easier to take the calls. I get better at it and I convert more because I'm trying to find more about the client. So what I'll do is I'm just going to walk you through the first file. And in this case here, what I'm doing is I'm asking questions and each question has a purpose. So when I go through this, when I talk to these guys here, these guys are in BC. So I'd ask them, how much is your home? And they said, well, it's about 950. So right there, their assessment's about 900 to a million. I know there that in my head, I'm thinking that this product could be insurable. Okay, so the pricing could be insurable. Once we get down here, I build out basically what's your current balance. And they also have a HELOC. So if they have a HELOC, I'm thinking to myself, well, that's at a higher rate. So it's likely this could turn into a refinance. I found out who the lender is. In here, it is one of these lenders. This is a monoline that we were working with. Or actually, no, sorry, it was a bank that we're working with, that they were with, and I placed them with that bank 5 years ago. So I'm trying to get that business back somehow. Okay, but I use lender A just for, for the sake of respect for the lender. This one has funded. So I'll ask when the renewal date is. Has your lender offered anything? And quite a few times is they will have an offering. So the bank offered a 3-year fixed and a 5-year variable prime plus 0.48. Okay, so I'm thinking here is, all right, if we end up going variable, we can beat the variable. Okay, so that's kind of what's going through my head. How would you rate your current lender? All good. HELOC was super helpful. Now, if there was a negative in here, then what would happen is I'd begin to say, look, we don't do that. And we would just basically justify the fact of the service levels we have on my team. So any plans to renovate? So these key questions here are the ones that really begin to form potentially some challenges, of course, or are challenges. So this is where it begins to kind of filter into, okay, it looks more like a refinance right now. So any plans to renovate? So they need a heat pump, has been installed. That was added to the HELOC. We know there's a HELOC balance. There's a leak in the roof, so may need to replace. So that's 14, and they want to do countertops. So right there, that tells me they need equity out, and this is likely going to be a restructure. Now, the next question is, do you have any other liabilities owing? So in this case here, yeah, we had a few in there, okay? And we're going to find this be much more common as time goes on in the next couple of years. So when we do these needs analysis, it's really, like I had mentioned, is you've got to kind of make sure that you're trying to set this up to be a home refinance so you can, at least get paid again or solve some problems for someone. If you find purpose, then you will be able to fund more files. So in this case here, we know they have the HELOC. We know they have an auto loan, which is $53,000. They're paying $417 biweekly, so about $800 to $900. It's at 649. And I'm just asking this, what are the debts you have? And I'm making these notes, either sharing the screen, they see me doing it, or I follow up with them after. Okay. Visa, we've got at 20.9%. They also have a MasterCard. They have a Prospera credit union, unsecured line of credit, 1249. So there's some pain there. So are your current mortgage payments okay? No. Okay. So now it's becoming more evident that this is a refinance. Because if they're at 15 or 20 or 25 years on the amortization, of course, one of the problems we can solve is to increase the amortization. Okay. Do your next mortgage term, do you plan to any of the following? And there was a negative on that. Variable or fixed, they want me to educate them. So down here, what I'll do is I've got it set up in here is that I'll share screens at this point if I'm not already, or do an update with them after via Loom. And I'll say, look, this is more so looking at a refinance. Okay. So in this section here is what I'll do is I'll say, look, based on renovations and other liabilities owing and your payments, it's really what it comes down to is it looks as though this is turning into a refinance, and they will most often agree. Okay, so this is collaboration with the client. Also, this person here had mentioned that the gentleman said he's very frustrated that every time their renewal comes up, they add money to their mortgage. So he's at the age of 50 and they'd like to pay down their mortgage quicker. Okay, so to me, I look at what I see from that is maybe a VRM would be helpful. Okay, because we know the payments don't change in a VRM. As the rates come down, the AM comes down. So in this, what I'll do is I'll just basically in the call, I'll run through what I've covered, and it shows that I've made notes. And the fact that we've made notes shows that we're doing something for them. Okay, so I'll go through and just kind of brief, and I'll say, look, really the next step here is I'm just going to introduce a couple concepts to you. Okay, and right now, and I had this built out, just I can do it quickly on here, is we can do a 3-year fixed at 499 in that range. Now, guys, this is a couple months ago or so. I mean, on this one here, guys, I'll be totally honest with you, is our rates for 3-year fixed, we all know we're kind of getting beat up right now on this. So for full disclosure is with this client, I honestly wasn't sure where this was going to go, but I had the offering. This is my previous webinar that I did was talking about fixed variable and ARMs and VRM and stuff like that. So honestly, guys, is they were offered 499 through, it was actually the letter of Scotiabank. Okay. And I can't do that. I know I can't at that time because we know what's going on right now. It is frustrating. So, but I do know there's other options I can talk to them about. So I said to him that 3-year fix, maybe a 499 in that range. And I honestly, if they wanted that, I would have had to give the deal back and say, just go talk to it because I can't, I can't do that right now. I did not say that, but we caught this in a time where we know that the product that they're being offered through Scotiabank right now upon renewal is prime plus 0.48. Okay. And at that time is TD was offering the prime plus 101. So we caught that. I remember it was like about a week and a half, and they pulled it. So what I did during that time is said, look, we need to get the ball rolling. We don't know when this is going to end. But in this case here is that if we end up comparing these side by side, 3-year fixed, is that if we go with the variable based on these, the expectation of the prime rate falling is you're going to save money. And over here, you can see the rates quite a bit higher with the prime less 0.48. So the game plan I'm letting clients know about right now is, the prime rate's going to fall. So why not fall with it and maybe lock in later? Okay. It's just one option to consider. So in this option here as well, I'm thinking to myself is I'm trying to get them away and get paid again, guys. So what I'm doing here is I talked a bit about the VRM and the ARM. And what really I think, other than the refinance purpose and consolidating all of the debt, is when I talked about this VRM, how when the rates come down, the payments don't change, but your you can see your amortization 24 to 23 every time the prime rate drops, is I showed them this. Okay, so I'm trying to find this. So the next step is, you know what, Russ, we're going to think about the variable and the fixed. And I said, well, the next step is we do an application form. Would you like to do that? And then we follow up with a proposal. So we did the application, and now we follow up with this. Okay, so I built this out for the next meeting. Okay, and what I've done here is I took all of their debts, and I won't use up all of your time here, but I put in here 20.9, and what we do here is a before and after. So what I've done is With this here, and I mean, we know who it is, but it's a variable. I put out 5 years, prime S 0.48. We don't need penalty calculations in this case. But what we do here is now I can present to them this, okay? And in here is I'll say, look, if you keep going where you are right now, this is what it looks like. But what we can do is we can actually, put it into 25 years, find a payment. I'm trying to find a payment that works for them, that they feel good about, because then we know at the same time is the prime rate's going to fall. So with that being said, is that it drops their overall payments by 891. Their balance would be a little bit higher, but that's because we've taken a lot of these things here and added it to the actual balance. If we want to try to drop that, then we just increase the amortization. But we found these payments here at 2253 to be good for them. And overall, that's going to save them 11,000 over 5 years. Okay, so this is one of those ones that's a no-brainer, but you have to visually show them. So the conversion on this deal is done. But if we have to come back to it and say, oh, the lender came back with this rate, we come right back here and we go, okay, well, if they came back, we can adjust it and so forth. So with this here, this process is the same as the next step is, would you like me to do this for you? And here's what we're thinking of for you is 361 for your mortgage. We have it at the variable, and we're going to do a HELOC for, actually we end up doing 100 in that range. So does this look okay to you? Yes, submitted, done. We've worked out all the details, okay? This is the first one. Now, when I do this, is what really came down to it is the VRM, is that when I talk to him about the VRM, is I've covered, I'm sorry for making you dizzy here, but I've covered all of these questions now. We've solved this problem, higher rate. We've gone to a variable. They want to add money for the roof and the countertops. We've taken care of all this high interest debt. And down here is we place them with the VRM because he wants to pay down the mortgage quicker. That's purpose, okay? So the next one I'm going to run through, and please make notes on this. This is being recorded, but what we can do is if you want to have a follow-up call or have questions, please put them in the chat and we can run through other scenarios. Now, renewal number 2, same thing. I'm going to pop in here and I am going to do a needs analysis, okay? And I'll often just send this to them, send access to them. Tiger Woods has already opened his account. It's green, and we can gauge when they've opened it. Okay, so you can see when clients have opened it and engaged their account. Now with this one here, same thing, guys. I'll run through a little bit quicker because we've done this already. Is 1.3 million of value. I'm going to say 5 years ago, this could be insurable, but we'd have to do title search to confirm. HELOC, we have a mortgage and a HELOC. Once again, we have a HELOC. This is a common theme right now. It's going to keep happening for us. So this is higher interest. Lender A, but this is a monoline, okay? So we know how aggressive they can be on their renewals. Comes up for renewal in September. So this one here is actually funding, like right now, we're just got instructed. Their lenders offer them prime less 0.3 and a 5-year fixed, or 3-year fixed of 504. Now, you can see that this is here, and is that it's not a very aggressive offer, and this is a monoline. Does anyone know why that would be? And pop in the chat if you have any feedback on that. And if there is no feedback, is what happens here is, you got it. Thank you, Terry. So what you're going to find here is that you've got to, if you don't ask, you don't know. So with monoline lenders, and what they have is when they did their original mortgage, if it fit in the uninsurable bucket versus the insurable, this pricing is going to be higher. Okay, so but you've got to ask. Okay, so there's one recently I did with a couple monolines where I found that I'm like, are you sure that rate is correct? But both of these products, 2 lenders now, I've done multiple files with these lenders, and once they're uninsurable and they started with a 30-year AM, then what happens is their pricing isn't the same with monoline lenders. So I hope that makes sense. So I know where I stand here. How would you rate them? All good. Any plans to renovate? Thinking of windows, have done kitchen, bathroom, HELOC is good to have. Okay. This particular lender they're set up with a HELOC already. Okay. They have car loans. Okay. John's at 6.5, Cindy's 2%. So probably not a whole lot of merit in doing anything with this. but they are interested. They've mentioned to me in consolidating John's auto loan. Now, payment shock, they're not all concerned. These are high income earners. Nothing is in here with regards to these questions, but down here is what I'm thinking is maybe we use a Scotiabank segment for John's auto loan if he wants to keep it separate. Some people want to keep that separate with couples, right? So what we did was we just broke down the concept of, I just show them at this point here, guys, look, here's an option here with Scotiabank. And this is just, I'm kind of ad hocing the rate. And here's the option with prime less 0.3 with your current lender is, to be honest with you, we're going to save you about 10,000 right off the hop. The next step is do an application form. Would you like to do that? Yes. Okay. So the next meeting is we do the application. We have all the docs. We've done credit checks. And then we do our proposal. Our proposal ends up like this. Is I will look at this for them. And I'll prepare this. Just, it only takes a minute to do. Is I put John's auto loan in there. I'm going to create a before and after scenario. I've added legal cost. I've added their line of credit, which is at 7.2%. And I've created this here, which is it. I'm just saying it's closing in 60 months. So now, once again, as I'm saying to them, their amortization is 14 years, 5 months. Is what I'm doing now is it sums it up all down here. And it just reiterates the fact that why we're doing this. And the whole point of it, even if this lender came back at a higher rate or lower rate, then there's still benefits in doing this. And that's how I'm losing less files on these renewals, is I'm trying to find purpose. Do I find them on every one? No. But if I don't go through this process, I won't know. Okay. So with that being said, is now I've summed it up in the before and after category, and it shows them 270. They're going to pay, they're not going to pay it off as quickly, but they're going to save, about 12,000. And what I've done down here is I've fully basically disclosed legal cost, and I've built everything else. There's no surprises. So then what I'll do is, once again, is I'll just pop down here and I'll actually talk to them a bit about, okay, what variable should we choose? Would you like, because we can do this with 2 lenders. We can do it with Scotiabank because they're with them online, and with TD. So I said, look, there's 2 options for you. Is that we can get about prime less 0.75 here. And then over here, what we can do is we can get prime less about 0.65. So right there is that this is a little bit higher, but your payments will come down here. What would you like to happen? They want their payments to come down. So this one here is we built it out for them, and we're moving forward with that. So that's closing as we speak. Okay. So as you see, the theme here is we're trying to find more than just rate. Okay. But we don't know unless we run through a needs analysis. Now, the last one I'll take through with you guys is these are all perfect scenarios. So of course, we're going through some scenarios here that the rate is actually lower than what we can offer. Now let's go to a rate that is being offered that's higher or better, or sorry, lower than what I can provide. Okay. So let's look at that one. So once again, my call comes in. I know exactly what I'm going to do. I know, this is basically my process is I'm either sharing screens or I'm on a call with them or a phone call, and I'm just running through a needs analysis. Okay. Value of the home, 1.45. That may be a stretch to be insurable pricing. Okay. Because 5 years ago, it probably was over $1 million. Okay. But if we really need to compete on this, then we do a title search. Mortgage is 371. This is currently with a monoline lender. Okay. Renewal date is August 1st. So we've funded this one. The lender has offered them a 5-year ARM at prime less 0.95 and a 3-year fixed at 489. So those are pretty aggressive prices. Okay. Pricing. All right. So, a lot of the stuff here is, if it's prime less 0.95, unless I can make that better by 10 to 15 basis points, a lot of the time I don't want to waste the person's time. I don't want to take them through the process just to save $500 over 5 years. So in this process, like I said, I'm trying to find pain I can solve. Okay. Lender is all good. No plans to renovate. They've done their renovations. They have 2 car loans. So we're going to find this, I keep saying this, more common, guys, within this, in our environment that we're in, right across Canada. They have 2 car loans. Dale's at 2%, Sean's at 9%. And I put asterisks here because they had said, I think we want to consolidate that, look at an option of it. So in 6 months, they may be able to pay it off. I'm like, okay, well, if they can pay it off, maybe there's no point. So payments, okay. Yes, they're fine. So we don't need to worry about reamortizing. Okay. So Dale is now working again. They lost their jobs. They're in the tech sector. But down here, we ended up actually, they have a son that's 17. And the more notes I made on that, which I always sum it up down here, is the son would like to go to school in Alberta and the cost is roughly 70,000. Should need 40,000 or so for so-called student loan for him and other funds to come from RESPs. They don't qualify for a student loan. Okay. So they need to find about 40,000 or so in order to make this happen for him. Okay. So right there, I'm trying to think to myself, what can I do to help these people? Okay. And with that being said, is in this meeting, and this may not go anywhere, guys. I'm throwing these things out there of trying to solve problems for them. And in this meeting, I compared a variable at prime less 0.8 with the prime rate coming down and the flexibility, the concept of, look, just going variable at this time may be a good way to go. And I compared that to the 489, and it's actually higher over there based on the prime rate coming down and locking in at some point. Like, it's the strategy I'm fully disclosing to them. They thought about it and they said, you know what? Yes, we're going to go with the arm. Okay, we're going to go with a variable. Now, if they went with a fixed, then at that point, I don't know. I mean, it's probably, I can't really do 489, right? I can't. So I probably would cut it loose, but I've done my due diligence on the file. However, during that call or that meeting, I actually met with them Starbucks, is I started talking about this. And I said, well, if we're going to go variable, what we can do is we can take you over to a different product and we can build this out for you. Because what happened is, and I'm sorry I'm making you dizzy here, but they actually ended up wanting to do this. And he said, you know, Russ, this is mine. It's, in our marriage, this is my debt. I want to keep it separate. And then we also need money for my son to go to school. So now what I'm thinking is a step. So then when we did the application form and summed it up, I'm going to try to solve these problems. Now, the next meeting is basically a breakdown of my proposal. And what my proposal is across here, you can do up to 3 segments. All of these segments will funnel down here, and I'll show you that in just a minute. So what I'm going to do here is, we know the mortgage right now is I've added legal fees. We know the current mortgage lender is offering prime less 0.95, so I can't do anything about that. Okay. But I'm gonna solve a problem here. Is then what we're going to do is we're going to drop the rate on this one here, this personal loan, from 9% down to the variable, and I'll show you that in a second. And then we're going to add a HELOC on for the son to go to school. Now, they want a student loan. What happens here is that within the Scotiabank step, you can do up to 3 mortgages and 3 HELOCs. So what I said is, once he's done school, if you want to act as the loan person, is you can push the HELOC of 40,000, you can push that into a mortgage if you want. And that forms a student loan, and it's totally segmented that you can just have that directly for him. So now I'm speaking and trying to solve problems. Okay. Down here, my proposal is, you can go with prime less 0.95. Your auto loan, you can keep it like that if you want, but you haven't solved the problem of your son. Okay. Basically needing money funds for school. I said, well, in this case here, we can look at prime less 0.8. So it's 15 beeps higher than what you're paying. You've got legal fees. You can drop your rate on the auto loan, drop your payments, pay it off a little bit quicker, and we can add the HELOC on at the same time. At the end of the day, over 5 years, is what happens is the payments are $34 higher, and they're actually going to lose a couple thousand. But due to the fact that we solve problems and we have a game plan, they weren't too concerned about this. So proposal is, we've submitted this file, it's funding soon, is I double checked with them, is that, look, this is what it looks like. Is we're going to do a mortgage for you over 15 years, here's the payments. And this can be done via video or whatever you'd like. We also have your auto loan, which is 30,000 ammed over 5 years. You're paying it off quicker and the payments are actually lower. And we're going to set a HELOC up for you. Okay. And that's going to be about, if you were going to make full payments on $600 a month, this does not apply unless you advanced on it, but we're going to try to get that for you prime plus 1/4 to 1/2. So would you like to move forward? And at this point here, if there's any sort of hesitation, then I don't want to screw up my efficiency ratios and my submission ratios. So at this point, we have done strategy session, application and proposal, and this is the time is where I'd be looking for them to fully commit. Okay. Now, I have had times where people come back to me and the current lender will come back and say, well, now we can do problem S1. Okay, fine. Are you willing to risk all of this for about 3,000? Does it still make sense? Yes. Okay, good. So this is where I can tell them over the phone, but if it's not visual, and that's why I built this platform, is that it takes a little extra work to do this. But for me, what I've done too is once I go through these strategy sessions, is my team, when they go to underwrite it, I don't have to tell them everything as well. And I can go back. It's a system of record. So it's really, this tool is meant as a presentation tool for clients based on each strategy session. And what I'm going to do is I'll cover first-time buyers in the home purchase section probably in a few weeks, 3-4 weeks, is I'm going to do a call that I have with first-time buyers. Okay. So this is pretty much what I want to cover with you